Good morning, everyone. It's Dan Bossy. Ben Buckner is still at work doing some work in London and coming back today, so you're stuck with me again. But I did want to talk about the grain markets here on Tuesday. As we look at the last week of May, we're now heading into the last week of May. Of course, the calendar turns to June on the weekend, and we'll see where we go thereafter. And I think it's key now as the seasonal price trends really start to turn downwards if we don't have a weather problem, or if we don't have a trade deal of size or substance with India and some of these other key countries. You know, over the weekend, we had news that President Trump changed his mind again. And from Friday, of course, he had placed threats against the EU for tariffs upwards of 50% as of June 1st. He had a meeting and a call with the EU president, Ursula von der Leyen, and basically they made amends, and that we're now shifting back to where the EU will be negotiating more specifically with the U.S. Up until July 9th. Now, this only gets us back to where we were. It doesn't change anything per se. The market last Friday was concerned. Soybean prices fell. Today, we're seeing soybean prices rising accordingly. There's also what I call hopium. I mean, there's been a lot of hope, if you will, from the biofuel side that we're going to get an RVO. We're going to get something positive in terms of 45Z. And then the uncertainty remains how many of the 169 applications will see SRE or small refinery exemptions. So we'll go through all of that. But, you know, the soybean market is seeing a little bit of bid this morning, just as repositioning, as we now expect the EU will, of course, be in slots that it can take normal amounts of U.S. soybeans until we get to July 9th. And understand that for many, many countries, that July 9th date looms large. For the Chinese, it's the middle of August with their trade negotiations, so a little farther down the tracks, if you will. But July 9th will be something, as we turn the calendar past the 4th of July, Independence Day in the United States, whether or not we see progress with a host of countries will be very important to the markets and to the grain markets in particular. Mars, the crop estimating arm of the of the European Union, of course, estimated that wheat yields would be their best looking backwards since 2019. That was seen as a somewhat negative to the wheat market over the weekend. You see here that Mars total wheat yield projections in April and May this year versus last year are substantially better. The USDA is projecting the EU wheat crop at 136 million metric tons. Relative to the Mars estimate, you wouldn't want to change that. It's about 89 bushels an acre holistically across the entirety of Europe. And then, however, I would mention to all of you, when I look forward, though, the Mars correlation or the R factor in terms of wheat yields relative to final production is only 0.18. So, you know, before we get too embedded in that estimate of a big European wheat crop, let's remember that it's the finishing weather over the next 3 to 5 weeks that'll be the key. And that's really where I believe the wheat market will follow and what pay close intentionally due to, of course, what the importance will be of EU in terms of wheat exports looking forward. We also want to be aware of, as we head into this new week, the last week of May, that our friends in Brazil are very slow and latent in making corn sales and corn exports. In the charts to your left, you see the commitment pace for the Brazilians, and corn sales are running well below recent years. In fact, running at one of the lowest levels in the last decade. And then when you look at vessel arrivals down in Brazil, you can see that those vessel arrivals to pick up corn have been very modest. And so, you know, the Brazilians, if they do have a corn crop, estimates range from 130 to 140. We tend to lean in that 136 to 138 area at Ag Resource. It is going to be a potential record large crop. And the Brazilians are going to have to start to become more aggressive in terms of offering prices. So we look for Brazil to be more aggressive as we get into May for July, August, September, October, November delivery. This will cut into U.S. export potential. At the same time, we're cutting into U.S. soybean export potential because Brazil will have anywhere between 19 to 20 million metric tons of additionality of soybeans available for export in that time frame. So longer term, this is where, unless we get a U.S.-Chinese trade deal, which I'm doubtful of until, let's say, the last half of this year, I believe that it's weather and the Brazilian export and aggressiveness in terms of pricing their grain, both in terms of corn and soybeans, that'll be important. U.S. weather looks non-threatening. As you look at the rainfall map for the next 2 weeks from the EU model to your left, and you look at, of course, the temperature profile in that same time frame to your right, we really don't have any big threats. We do need less rain across portions of Oklahoma, Arkansas, into the Tennessee Valley. That area was wet on the weekend, a holiday weekend. We'll see additional rains as we look at the forecast. But other than that, we're getting better rains moving back into Canadian prairies. We're seeing some rain across the upper Midwest. Conditions are generally favorable. Today, Ag Resources looking for U.S. corn and soybean condition ratings, or excuse me, just corn and spring wheat ratings, to be at least 75% good to excellent. Now, that's above the 5-year trend. So if we see ratings that I believe will be in 77 to 78% good to excellent on corn, it's a very favorable start. Yes, we could see some warmer temperatures, but those warmer temperatures are offered once we get beyond the Saturday, Sunday timeframe. So a warming trend with better rainfall and no high pressure ridging. In fact, as we look at the later periods of the 2-week forecast, we have what's known as a trough ridge pattern across the United States. This would produce above normal rainfall and cooler temperatures. So all of this would be negative, if you will, to the marketplace and give us non-threatening weather, at least as we look forward. Lastly, I did want to talk about the extended range. There's been a lot of talk about cold water across the Gulf of Alaska. If it were to develop, how that could set up what we call a trough ridge trough pattern across the United States. In other words, a central U.S. high pressure ridge. As you look at the map to your right, you see the warming that's happening in the Gulf of Alaska. This is contrary to a central U.S. drought. So as we measure the risk at Ag Resource for a central U.S. drought or extreme heat this summer, we're putting it about average. We're not saying it's gone, but we're not seeing it any more than, let's say, 10 to 12%. So if you're making that bet, please be aware that, at least for now, the Gulf of Alaska is warming and we are diminishing the drought risk, at least looking forward. So with that in mind, I just want to get back to you and say thank you for watching here today. You can always take a trial for $1 for the next month to get our specific research and updates. We are looking at the markets here, seasonally speaking, as being in a downtrend. So whether it's a weather problem or a U.S.-China or some kind of trade deal, that's what you'll need to get price bounces. If they occur, we think they're selling opportunities. At least for now, we're not seeing the evidence of a lasting bullish trend in the grain markets looking forward. Have a good day. Dan Bossy from Ag Resource, wishing you the best of trading. We'll be back tomorrow with additional comments looking at the markets longer term. Be well, everyone.